Hi everyone, and welcome to this afternoon's webinar, or at least this afternoon for us here in the UK. I can see some of you were with us this morning for the London session, so welcome. And I can also see some of you who've, I think, first time visitors. So whether it's your first time or your regular attendee, welcome. But before we start, as usual, we have to start with the disclaimer, which I know you can see on your screen. And as you know, trading can be very risky. So please don't ever think of using money that you cannot afford to lose. And for those of you who've not been with us before, what we're going to do in this session is we are going to be looking at the charts through the prism of volume price analysis. That's a methodology that David and I, my husband, who's sitting next to me, have been using ourselves for, oh my goodness, almost over 20 years. Lots of books on Amazon. Just search my name, Anna Cooling, and the books will pop up if you've not come across this methodology before. And we'll also be looking at the charts supported with our quantum trading indicators. And I know in the room we also have some of our quantum users as well. Right, let me just take that down. The charts that we tend to focus on this session are the indices and commodities, but we also will be touching on the forex, some forex charts as well. And in fact, this is a chart that really has its narrative from this morning. And this morning, when we got up this morning, and knowing we've got the webinars and looking at our positions and trading, etc., we were actually thinking, oh my goodness, it's going to be a bit of a quiet day today. Last week was quite lively, and this week's been a lot of range bound price action. And that's was our expectation was. And the reason I had the pound Aussie up, as we can see here, this is on my MT5 platform, is because when I looked at it this morning, it had the time frames that I like to use. There's a Renko chart over here on the left. This was actually the 3-minute chart, but 3 or 5 minutes. It's a faster chart, a 12-minute chart, and I like to have the hour chart. So that's, if you like, that's my time horizon. This is the this is what I focus on. I'll have a look at the daily as well, because sometimes I could be looking at taking positions against, if you like, the bias on such a slower time frame chart. But what was interesting was that all three charts were basically in consolidation, moving sideways, not really an awful lot going on. And when you look at that in the 3 time frames that you're looking to trade, then I'm afraid it's just a question of being patient, because at some point there will be a divergence, because at the start of a trend is a divergence. It'll be either from a reversal, diverging from bullish to bearish, and vice versa. And certainly for Forex, where you're trading one instrument against another, the driver is going to be either positive sentiment on one side or negative sentiment on the other, or vice versa. So that's the situation was this morning. Then we had the news that China had there was an announcement. Let me go and fetch it off the Reuters. There we are. You've probably seen this already. It's appeared in all the news feeds. Here we are. Where is it gone? This is the old one. I seem to have lost it. Hold on, not Reuters. It was CNBC. Just bear with me a second. This was yesterday. The delay, this so-called delay in the signing of any deal, is really what caused the markets to pause the other day and actually pull back. Here we are. It's China says it has agreed with the US to cancel existing trade tariffs. Now that's actually quite important, because in this ongoing saga, it's Donald's Twitter feed is the one that keeps coming out saying, oh, everything's going fine, everything's going fine. But for China to say something positive and not reacting to what Donald has said has really sort of got the market going. And what happened in the pound Aussie, in fact across the Australian dollar, and in particular the Aussie yen, was that there was a strong buy of the Aussie. And the reason why is because the Aussie is closely allied to whatever happens in China. It's a risk currency, so it was risk on sentiment, and away we go. Now, the best way to see it is on the hourly chart. This is the announcement. This is what I was looking at, you know, before the start of our webinar, and I was thinking the reason I pulled this combination of charts up was because we're looking at, when we come to our charts, what are we looking at in terms of trading conditions, as it were. It's a bit like, as we've said before, you have a little boat and you're going to be setting off across, you know, sailing across a bay. You would look at the weather. You would say, now, you know, have I got enough wind in my sails to sail across the bay, or is it going to be, is it a very quiet, very sort of in the doldrums, as it were? How am I going to get across? And it's exactly the same with trading. And on our charts, the only way we can see or get a sense of what the condition of the market is and what the condition of the chart is by looking at the price action and the volume underneath it. And the price action is when you have these consolidation phases. You can see here it's quite a long consolidation period. The market is either waiting. There's not an awful lot going on. Yes, there is, you know, there are, if you like, trends in the faster time frames from these moves on the hourly chart, but there's no firm direction. And the indicator that helps us, if you like, identify the most important zone on the chart for consolidation is what we call the volume point of control. It's based on, it's got elements of market profile in it, and it's sort of, if you like, the value area of the chart. It's where there is price agreement between the buyers and the sellers, and price is simply moving sideways. Then something happens to cause the breakaway, to cause, you know, to bring some divergence. And this is this candle. This was the hourly candle. There was an immediate fall in the pound, lots of Aussie buying, reflecting the new risk-on sentiment. But as often happens when you have volatility coming into the market, and we have a trigger of our volatility indicator, these are these two purple dots, it's triggered because this candle is now outside its average true range for this particular time frame. What often happens goes back to within the spread of the candle, which is exactly what we had. On the faster time frames, there was certainly enough of a move off this trigger. This is exactly the same piece of price action on the 12-minute chart. We had a trigger of the volatility indicator. Then this is this spike. This is the buying that we see on, sorry, this is carrying lower. Then this is the buying back. This is the, if you like, the equivalent of the spike that we have on the hourly candle. And what I said this morning was, this is the pound Aussie, but you could be talking about anything here. You could be talking about a stock, you could be talking about an indicator. When you have the volume point of control, first of all, it can help with identifying successful breakaway trades. And we do that by looking at the volume underneath the price action to see whether that is consistent with the move either higher or lower. In this case, it was lower. What it also acts as, it acts as a barrier. So your stop loss is you know, where you're going to put your stop loss is very clearly defined. It's obviously going to be behind this this line here, the VPOC, because what we're talking about with the volume point of control, as well as being the point of control of the chart, it is also volume based on transacted volume, and it's volume over time. And the more the wider this this histogram is on here, the stronger that resistance is, or support. In this case, it's resistance. And what I said this morning, we had this dramatic fall because of the news, and then we had this snapback, if you like. And what I said was, what the VPOC does, it also acts as a point where the price action is likely to pause. It's going to act as resistance, and in fact, it did. And then I also said, and it's in the recording if you want to catch up, where if you've missed this, what are you going to do? Well, are you going to take this reversal trade? That's up to you. But if you can see that's coming down and you want to actually join the trend lower, because we have the trend monitor was still very, very, it was bright red, well, you have to wait until you have a break of the low of that volatility candle on the hourly chart. And this is where the Renko will help. This is not, I don't think I've got that piece of price action because it's too far back. There we are. I have a feeling this might be it here. But what the Renko will do, it will help to keep you in a move. So if the pullback is simply that, simply a minor correction, the trend monitor will stay either bright red or bright blue, depending whether it's bullish or bearish. It will absorb the pullbacks. But what the Renko also does, it highlights very well the trend. This is let's say this is the primary trend lower. These are the pullbacks in the trend. The trend dots still stay red, and what we want to see is not only the trend dots staying red, but we want to see them at the top of the candles because they are pushing the price action lower. We want to see this confirming this this trend lower. Then we have the pullback. Is it a secondary trend? Is it a micro trend? Is it a potential, tradable secondary or micro trend? Well, in this case, no. Why? Because although the trend dots turned to grey and then to blue, we had a pivot fired. This didn't go into bright blue. It stayed in this intermediate colour. So we know the trend is going to carry on lower. And we also know that because although this is a blue dot, it's at the top of the candle. So the position of the dots will also give you a clue as to what the price action is actually doing. So that's what we had to wait for. And then if I go back to the 5-minute chart, this was where the volume point of control was on the 5-minute chart. Then it's moved down to here. So you could actually also use the VPOC as a potential re-entry. Now, what I've been looking at is whether, in fact, it is going to carry on low. We've had an attempt at a breakaway. Let's look at the volume underneath it. Well, it's quite a wide spread candle, but the volume underneath it is not really consistent with the range of that price action. So using the elements, the principles of volume price analysis, which are really elements of, if you like, confirming, authenticating the price action that you see on the chart. And if you see an anomaly, you know that it's not genuine and it's not consistent. Applying that to the structure that you see on the chart. So is the chart screaming at you that, this is not a reversal opportunity here? This is, everything is in congestion. The time frames that you use are in congestion. You have to be patient, and possibly you would have to look at some kind of breakaway tactic. Entries using certainly a combination of the Renko and the faster time frames. Now, if you don't like using breakaway tactics, i.e. moving away from an indicator such as the VPOC because you prefer a reversal, you prefer to look at a candle pattern, maybe a hammer, a shooting star, just a different configuration of candles. So say look at something like this on the hourly. This is the trend that's been lower. It's obviously found support. We've had buying coming in. Why? Because we've got a wick to the bottom of the candle. We've got a reasonable amount of volume under that one. We've also had a degree of buying under this volatility candle here. By the way, the second volatility candle on the pound Aussie was nothing to do with US and China. It's all to do with the British pound, because we've had the BOE interest rate decision, and there wasn't a raise in interest rates. And basically what the Governor Carney said about the British economy, which wasn't terribly positive, which is why we've had selling of the British pound. Now, in this pair, it's quite interesting. The driver this morning was more of a buy of the Aussie because of the China news, and then as the session moved into the BOE, then it was really much more of a heavy sell of the pound and continued buying of the Aussie. So it's much more symmetrical, wasn't it, David? There was pressure on both sides as it were. Now, so if you're a reversal trader, this is the kind of pattern that you would be looking at. You would be looking for 2-bar reversals, you would be looking for hammer candles, you'd be looking for lots of volume under here. This candle here, you can see it's that there has been an attempt to rise, but there's a wick to the bottom, reasonable amount of volume. But you know, when you're reversing after a sharp fall lower, first of all, you tend to get another period of consolidation, moving sideways, because any selling has to be absorbed before the price can go higher. You need lots of wicks to the bottom of the candle, so you have price support, strong levels of strong price levels, maybe going back further over to the left of the chart, and then the price will start to reverse higher. So that is a sort of reversal. You very rarely get sort of V-shaped reaction. You do, but certainly on the hourly chart, it's a little bit more measured. What we're looking for here as well, we need to see the position of the trend dot, even though it's not yet blue, it's still red. You want to see it at the bottom of the candle, supporting that price action. You want to start to see a transition in the trend monitor, and this is the trend line, which is another element of this indicator. You want to see that kind of beginning to turn up, as it were, on the hourly chart. And with regard to actually where you get in, well, this is where you'd have to go to the faster time frames. And what's interesting, on the 5-minute chart, it's actually gone back to the volume point of control. So if the volume point of control stays there, and that is going to be a reversal that you can see off the hourly chart, wait until that turns completely blue. They haven't gone blue yet, the trend dots, but the bottom of the candle, as I said earlier, you've got a reasonable amount of volume under that one. Let's see how this one pans out and see what, and basically just see what happens. Now on the Renko, which happens even faster, we're seeing the transition here, and we can see here, this is roughly where the VPOC is on the 5-minute chart. So it has to break from there and go higher. And really, that's how you read the charts, both from a multi-time frame perspective, a VPA perspective, and also the perspective of having indicators such as the ones that we have developed for MT45, NinjaTrader, and we've got TradingView, and we're just working on TradeStation as well. Now the next question is, well, where do we think this price is heading to? And here it's simply looking at support and resistance. How you like to define those levels of support and resistance? Well, we have traders who use the quantum tools, but maybe like to use a Fibonacci number. That's entirely up to you. We have a Camarilla indicator, which I haven't put on the chart at the moment. The lines here from this indicator, our support and resistance indicator, are your initial objectives, as it were, your initial targets. And looking at the 12-minute chart, if you where would you be looking for? Well, you could even conceivably go right back to the VPOC in this particular time frame, and certainly on the hour as well. So this pair has had a very interesting journey, as I said, from a break from the volume point of control on the hourly chart, driven by two items of one is geopolitical news, one is fundamental news, and now it is looking to reverse higher. And what will also influence the move in this pair is actually what is going to be happening with the with the Aussie dollar this afternoon, and that is really going to be dependent on what is happening in the indices and anything to do with China. And as we can see here, you can see the transition in the monitor always starts off in the faster time frames. It's also already transitioned in on Renko, transitioned on the 5. We haven't quite got a transition on the 12, and we certainly haven't got a transition yet on the hour. And as I said, my personal way of entry would be to look at the Renko. I want to see this consistency of trend dot, position, color, and the monitor. I like the fact that on the 5-minute chart, it is now above the volume point of control. So I'm looking at a breakaway. What I want to see is some good volume supporting this move higher. That doesn't fill me with an awful lot of, I don't really like the look of that, because that's nice. Got lots of volume under that, not quite so much. It's not quite at the average bar, but at least I have the VPOC as a sort of cushion, if you like. If this is going to reverse back, it's going to test that. Stop loss, well, the stop loss is fairly obvious. It's going to be maybe below this candle here. You could use this support line here, which is 185.67. And as I said, and what I also like is I've got this low volume node here on this time frame, which means that if the price does get through there, it is going to get through there fairly quickly. There's not an awful lot of volume-based resistance in this zone on the chart, and we know that because this histogram is quite narrow. It's certainly nothing like as deep as it is over here on the around the VPOC. And the Renko, well, this is the one to watch. This is this will absorb any sort of minor pullbacks and reversals. When price reverses into a bullish trend, it's always a little bit more labored. You know, price falls remarkably, you know, absolutely helter-skelters down. When it's going up, it tends to be a little bit more measured, which is why David always likes trading to the downside, don't you, David? I do indeed. Right, so I'm going to keep an eye on that and see what happens. This also, I have a resistance line up here for a potential target, but we shall see. Maybe this will just be a bit of a washout, given that it's the afternoon, and we will simply go back down to the VPOC and carry on sideways until Asia, and maybe even tomorrow. So what I've said, the narrative of these four charts really applies to anything based on, as I said, the candles, the candle patterns, the price action that you see, the construction of the charts. Are we in congestion? Are we looking to move into a trend? Are we looking at a breakaway? And how do the indicators that we've developed, how can they help you achieve what you want to achieve from the price action?
Yes, I think so. Sorry, Anna was just asking me a question. Cancel that off. Sorry, I'm trying to move my chat box out of the way and talk at the same time. Excuse me. Welcome, everyone. Good to have you here today, and thank you, Donnie, for that. Sorry, I didn't see the following question. Oh, right, about an internet website for... okay, fine, answer that as we're going along. Right, where are we going first? Let's have a look and see what's going on. I've got several things fed up. Let's go over onto gold first, because the indices are moving up nicely. There's some nice trades on the indices, pretty straightforward stuff. Not very complicated. Let's go to gold. This is what's happening on gold. If you follow Anna's site, you will have seen the post we put up there where there was a certain amount of disconnect between, certainly on gold and the dollar. But in today's trading, that has apparently reconnected it once again. So we've got gold moving nicely downwards. This is on the December contract. So this is 12.19. It's the 2019 for December for GC, which is the major the large contract. There is a micro contract for gold, which is a tenth the size, I think, off the top of my head. But this is the regular gold contract. This is on 3 minute, 5 minute. Down the bottom here, we've got 10 minute, and over on the right-hand side, this is the daily chart. It's been oscillating around gold for some time. Anna's been talking at length about the volume point of control. The volume point of control is certainly in evidence on this particular chart and a lot of others as well. And it's starting to break away. We had very strong selling volume under here, pretty weak response yesterday. I've got the volume switched off until the close, but it would be interesting to see how much heavy selling we get under here. And in terms of moving deeper to the downside, very lightweight in terms of any price support on the accumulation distribution. You can see it here. This has only been tested once, so it's a very minor level. It's got no strength. This is a stronger level because it's wider on the indicator. It does it automatically for you and displays it accordingly. It's pretty cool. But this is lightweight, and we've also got low volume here on the histogram on the volume point of control. So in terms of a further move south, if gold does break to the downside, there's very little in the way of, certainly from a technical perspective at any rate, to cause that to pause anytime soon. But we will see. Obviously, be looking at multiple charts across the time frames and so on and so forth. We've got a volatility trigger on 10. So that's always an alarm signal. If you were short this, if you were trading this short, this is a really nice example of a price, a waterfall, and the associated volume that you should see associated with it. We've got a steep curve to the waterfall itself. We've got widening price spreads, and then we've got rising volume, which is exactly what you want to see. This is heavy selling pressure building here. The issue now is this candle has moved outside the average true range. The expectation is that we might see a congestion period follow that, or a pause point, as indeed you had here. This one followed through, then we had another, and then we moved into congestion. It doesn't always reverse, it doesn't always congest, but that's the expectation. If you were short on this, personally, I would take the profit. I'd wait for a clearance below this candle and then jump in again if this is going to continue to the downside. Certainly looks as though it is. What's interesting also from a trend monitor perspective down here, we've gone straight through from bullish into bearish. So this is a pretty heavy bearish sentiment which is taking hold for gold at the moment. Trading around the volume point of control on 3, you have it there. Volumes building there. But in terms of price support to hold this up, very, very lightweight, nothing at all. And the volume is low here as well. So this is going to move through pretty swiftly. You can see the trend line here is diving very sharply. You can see the volume profiles associated. We've got the trend monitor bright red. You've got nothing at the moment to suggest this is going to see any buying to reverse this particular trend lower intraday at any rate. Up onto 5, similar sort of picture there. We had, again, the volatility trigger on this particular candle. We've had the congestion phase building. We've had 2 candles building inside that bar. Now it looks as though we're going to continue the break to the downside. So in terms of jumping in and out of the market, if you had profit in this, if you were trading this, again, it's a really nice example of a price waterfall. They don't come much better than that. Widening spreads, beautiful catenary curve to the vertical, lovely rising volume. It's all just confirming the negative sentiment, the heavy selling of gold. As I say, that's a textbook example. I couldn't find a better one if I drew one for you. That is perfection. That's what you're looking for the whole time in a price waterfall. And we're now coming into this low volume node on the volume histogram. And as I say, there's nothing in the way of price that's likely to come into play on the accumulation distribution. Certainly on the 5-minute, you'd be looking at the slower time frames, obviously, to see what's likely to come into play. And it all goes back to what Anna was saying about looking at chart and using the chart. We touched on it this morning. Anna was quite polite about it. I'm less polite about it. Risk and reward is a load of hogwash. Basically, you're looking at fixed ratios, not risk and reward, fixed ratios where traders look at 2 to 1, 3 to 1, all that sort of stuff. It's total nonsense. Look at the chart, decide for yourself how much clear water you've got in the trade you're potentially going to take. And that is the right way to do it, in our humble opinion. This is the currency strength indicator. I've got this on 15-minute. This is the buying. Just squeeze that over a little bit. There we go. This is the buying of the US dollar. You can see strong sentiment in the dollar right now. Just squeeze that back over there. So we're moving back up. We've had a little bit of a dip, but now we're continuing higher. So that is certainly helping this move in gold, which is what you expect to see. But I hasten to add, this relationship, as we pointed out last week, it comes and goes. It's not always perfect, but generally that's what you expect to see in terms of trading commodities, which is why you're always going to have the dollar up somewhere. So that's a nice move on gold. Really straightforward trading. You know, they don't come much more straightforward than that. Just head down onto the currencies, see what's going on here. Got some decent moves. This is all really just explaining what's going on in terms of the chart right now. This is the yen. These are on 5 minutes, so a fast time frame. This is the yen, top left. This is the indices. They're all available on the platforms, whether you have Ninja, whether you have TradingView, whether you have MT4 or MT5 or TradeStation. These will be available. So we've got the yen index here. You can see what it's doing. It's in congestion right now, so no particularly strong trends there. Sentiment's flip-flopping around in terms of the yen. Over on the dollar, this is the strength in the dollar we're seeing, rising strongly. This is a lot of weakness in the euro. We've had this since cash markets opened US time, 1:30 odd here. and that's been heavy selling of the euro. In fact, I've got the euro future over on TradeStation. I'll pull that over in a minute. You can have a look at that one. Again, really nice trend, very straightforward, supported by the trend monitor, the trend dots. In fact, I'll pull that over in a sec. And this is the pound. We've got some pound buying on 5. And again, obviously, we've had BOE and we've got Brexit, and Brexit is always going to dominate for the next 6 weeks until the election on the 12th of December. The polls will dictate as well, and then all hell will break loose once we have the election result coming in. So election night will be extremely volatile for the British pound. Just to pick up on what I said earlier there about the, here we are, this is the euro, this is the 6E, this is the futures contract for the euro dollar. This is the CSI again, we're now on TradeStation. These are the indicators we're currently working on, currently porting them over to this particular platform. This is actually being driven by Interactive Brokers. It's a relationship that was formed, I think, maybe 2 years ago, something like that, 18 months ago, TradeStation and Interactive Brokers. If you have an Interactive Brokers account, I know a lot of you do, you can actually link this directly, and that's what I've done with one of our accounts. I've linked this directly through to TradeStation. So the data is being driven by Interactive and trading through the TradeStation platform, which is fantastic. It's a great relationship, and it's certainly worth investigating if you have that particular account. Got the trend dots on here, got the tick volume down here. You can see the volume building. It's really elegant. Down at the bottom here, we've got the trend monitor. You can see that we transitioned into red. We had this minor pullback. And what you're always going to see is the trend dots will migrate first to a different color. Here they've gone into gray, which is the transitional color. They've gone into a bullish trend dot. Then they've rolled over and back into the bearish trend again. The trend monitor doesn't change. That's the nature of how we developed it. The trend dots are very close to the price action, so they will always change first. The first thing that will happen is they will move into the body of the candle, then above the body of the candle, and then if it's going to roll over again, they'll move back above the candle and pushing down, pushing down. So they give you that signal as well as giving you the color elements as well, depending on whether they're below the candle or whether they're above the candle. But then in addition to that, obviously they change color. But the key point is the trend monitor, it's looking at trend from a longer term perspective. So the trend dots will always change first. They'll give you that heads up to minor changes in sentiment. And then if it is a strong change, in other words, a true change in sentiment from bearish to bullish or vice versa, then the trend monitor will signal that through the transitional colors. You can see the volume coming in here. It'll be interesting to see how this candle builds. We're on a 5-minute time frame here. It's the heaviest volume of the session so far, so continued selling of the euro for the time being. We've got the volume point of control up here, so we're moving down into this low volume node. All things being equal, that is like to pause there. Just pull that down a little bit. There we go. So that's on TradeStation. I've also got, I'll pull that back over in a minute, just move that out of the way, because I've also got the VIX on here as well in various time frames. Just pull that back over again. Sorry, I just had to change that. This is the VIX. This is the VIX on the CBOE. So it gives you, this is options. You're looking at the volatility index and what that's saying in terms of sentiment, risk on, risk off. As the VIX falls, then equities and markets are like to rally in terms of risk, and vice versa. We've got the Renko here down at the bottom left, and we've got various time frames. We've got the 3, the 5, the 15, and this is the daily chart for that particular instrument. And we're getting down into fairly low levels now as the indices continue to climb. Now they've broken through key technical levels on the dailies. Let's check in on the indices, see where we're going. There we go. That's what I said. Pretty straightforward stuff. What's interesting at the moment is that the one that's leading the way, if you will, is actually the YM. You've got our favorite. You've got the 5-minute time frames across the top. Across the here, and this is the YM on the left. This is the Dow Jones derivative. This is Dow 30. This is the NQ. This is NASDAQ 100, and this is the S&P 500. So these are all the futures contracts, the E-minis, and they're all in the December contract. So that's on 5-minute time frame. Down the bottom, we've got the daily. That's what's happening on the YM. It's really leading the way. Nice widespread up candle. Very solid price action. The NQ is certainly going in the same direction, but perhaps not with quite such momentum. And the same is true of the ES. When you're trading these, we always have all three of them up because they give you different perspectives on price action, and also whether the three are moving in lockstep or whether one is lagging and the other two are leading or vice versa. It always gives you a slightly different perspective. And literally, as I'm talking, if you look at that, for example, that's on the ES. Just pull the box out the way. Go away. There we are. Move down the bottom. This is on the ES on 5 minute. Nice, decent volume coming in. Big wick to the upper body. Hopefully you can see that on the screen. So there's a certain amount of selling coming in. We're also trading around the volume point of control on this particular time frame for this particular instrument. We've got a very strong platform of support. This red dashed line, which was resistance over here, was tested, retested. It's now become support. So it's very, very strong. It's been tested and retested many times. It's a very strong area, and therefore it's going to act as a platform of support. The wider the line, the greater that area has been tested, and therefore it gives you a perspective in terms of price resistance and price support very visually. These levels here are less important because they are less wide. They're not so strong. This is 1, this is 2, so on and so forth. But where you get these, and particularly where you get them as clusters, they act as very strong resistance and support. Trend monitor is blue, as you can see. So there may be a temporary pause point, but in terms of the YM, we're still carrying on higher. And we're starting to break away from the volume point of control, which is sitting below, quite a way below now, as we move up into these upper regions where we've got low volume in terms of this particular chart, the 5 minute time frame. So all things being equal, and very lightweight, in fact none at all in terms of resistance from a price-based perspective. Let's just look at that on the multiple time frames. I think I've got the NQ actually on the multiple time frames. Yeah, I've got the NQ. Let's just change this over to the YM. 1219, there we go. Just click on that. They're all linked together. It's one of the features of Ninja, which is really nice. You have these little buttons up here. You can interval link or you can instrument link, and you've also got that on TradeStation. It's pretty cool on TradeStation. You can locally link and link globally as well. It's more sophisticated, to be honest. It has much more flexibility than these, which are relatively basic. Let's just see where we are. This is on the 15-second chart. For those of you who come along regularly, you'll know I like to have a pretty fast time frame to work with because it keeps me sharp. I like to trade off this time frame as well, and it also gives me a heads up as to what's coming up at me in terms of a 1 minute, 2 minute, 3 minute, 4 minute, etc. time frame. We're trading around the volume point of control. All the indicators work in exactly the same way. You can see very clearly the weakness that came in here. It's self-evident. We had a volatility trigger on this particular candle. Then we had weakness coming in here because we've got selling, narrow body to the candle, deep wick to the upper body, ton of volume underneath, and then we had a repeat performance. So this is not strength, this is weakness, and that's what we're expecting to see. The market's rolled over. Bear in mind this is 15 second, and we're not talking a huge range in points here. But the principles are exactly the same. Go down to the 2 minute. What's the 2 minute telling us? Well, we've got a volatility trigger, so what do we expect? We're expecting congestion, which is actually what's being delivered. So happy days, that's it. We either take our profit and get out and wait, or if we're patient and we want to sit through congestion, and we're quite happy to sit through congestion, if we think the market's going to go higher, that's fine. Personal choice. I always close out. If I had profit in here, I'd be closing out, sit there waiting. If the market's going to bang up higher, then no problem. We'll wait for it to go through 30 maybe. What have we given up? Maybe 10 points or something. But if it goes through 30, then we'll just jump back in again. I don't particularly want to sit through this if I've got an open position. And if it reverses against me, I don't particularly want to be stopped out, clearly. So it's a very simple choice. If you've got a position in profit and you've got a volatility trigger, then 99 times out of 100 I'll close out, unless there's a very good reason not to. Because the cost of trading now is peanuts. It's next to nothing.
Sometimes it's actually free on some platforms.
Some platforms are actually free. You can trade raw spreads in Forex, where you can actually trade between the spread, different commission plans, all sorts of stuff. So it's tiny. The cost of trading really only comes into effect if you're trading hundreds of times a day, and you're trading as an out-and-out scalper, and you're literally making a few pips here and there. Then it does become a factor. But generally speaking, I would say it's not much of a factor to consider, as I say, unless you're trading many hundreds of times a day. which most traders don't. So we've got the trend monitor here. As I say, it's you can see this example here. It's supporting us through the trend, which is exactly what we want, because the hardest thing to do in trading is to actually stay in a trend. You get this money in here, and then it starts to pull back, and you close out, and now you're regretting it because it's carrying on higher, and we may get the same again here. And all this does is it just gives you confidence, if you will, because it starts to rotate into the darker color, but it never goes into a darker red. It comes straight out the other side. We had a little bit of a pause point here, but now we're back into blue again. And really, that's what it is about. That's why we developed it. It's just so powerful. It's got a simple use, which is to help to identify when trends are building, when they're reversing, when they're changing. So it tells you how to get in or where to get in. You're using this in multiple time frames. It also helps to keep you in, which is the most important aspect. Let's just go down onto 15. See, we've got 15. A little bit of weakness on that. Nothing too much to frighten the horses, to be honest. Yeah, we've got a decent volume under there. So yeah, there is some selling, but then there's profit taking coming in all the way up here. No great surprise. Lots of traders, banking off their profits, getting out, and maybe waiting for the next phase of price action to develop. Just go back to gold, see what's going on there. Where are we? There we go. That's there. There we go. That's so we're carrying on down. There's a lot of money being made here. I mean, this is serious money, and it's not too difficult either. When you get one of these moves, this is where you've got to cash in on these moves. This is just simply about making money. Cash in. Trend monitor's bright red on 3, bright red on 5. Bright red on 10, it'll be bright red on 15, and so on and so forth. And really it's a question of at what point do you want to bank and cash out? And that will be dictated by volume price analysis in conjunction with the indicators. Partially you'll be looking at this dollar progress. If this dollar gets up into very overbought, which it is at the moment, starting to move into that region, if you start to see that rolling over on the particular time frame that you're trading, then that may certainly be one signal of several that will give you a heads up as to possibly it's time to bank what you have and get out and wait for the next move to develop. I've also got, be interesting to have a look at oil. Quick look at oil, see what's going on there. This is the CL contract, WTI contract. This is on 1 minute, 5 minute, 15. I haven't got the dailies up here, but it's just to get a heads up. In fact, click that over. Let's change that. No, I'll leave that where it is. Leave that where it is for the time being. There we go. That's what we've got with oil. Got some bullish, but then we've got volatility here. We're trading around the volume point of control, so we're expecting some congestion to build. No great direction at the moment. Let's go back to where are we going? Let's go have a look at the tick charts. Forget what I've got on here. I've got the NQ here on tick. Yeah, I'll leave that in the NQ. This is on tick charts. If you've not traded on tick charts, then it's like a Renko chart. This is non-time based trading, and what you get with a tick chart is you get raw momentum of the market. When the market's moving quickly, you will see it on a tick chart and you'll see it on a Renko chart. You won't see it on a time chart, which is why traders, particularly intraday traders, like using tick charts. And what we've done is to actually develop an indicator which delivers the optimal settings for each of these time frames. This is a 1 minute, so this is set at 6:10 tick at the moment. That's what it's delivering. It's pretty sluggish. You can see here this is red. The actual participation is pretty low. The tick count is pretty low, and it's telling us that visually as well. 3 minute chart here, that's running at 2584 or 2804 is the actual. This is just a close approximation to this number, purely because this changes literally second by second, whereas this is more stable and therefore more practical when you're trading intraday rather than having to change the charts all the time. I've said it many times before, when I'm trading on Globex only, in other words, through our morning, before the cash markets open as they've just done, I will use the actual figures as opposed to this number here. And when the markets are trading as now with Globex and cash running in parallel, then I'll use this number. This is a little bit low, so we'll just change that up, 25.84. That's on the 3-minute, and the 5-minute is very sluggish at 15.97. There we go. So we've now got the tick chart set up. Volume point of control works in exactly the same way. You can see it here. We've got support and resistance. We've got the trend monitor and everything else. And we can apply volume price analysis because we have that relationship up here visually on the screen. So we have everything we need. We have the advantage of trading on a non-time-based chart, which is a tick chart, and we couple that with the volume price analysis methodology over here on the tick speedometer. So we get the best of both worlds. Just keeping an eye on what's going on in terms of the, let's go back to gold for a moment. Pop that up there. There we go. See if it's pausing. Any sign of reversal? Not particularly at the moment. Let's just pull this over. Back onto TradeStation. This is the VIX. That's not doing much at the moment either. You can see it down here. This is on the daily. It's pretty sluggish price action. It's not rising, not falling very strongly. So it's just moving sideways with no great strength at the moment. Let's just go back to the euro, see what's going on there. Interesting. Heaviest volume of the session now under here. You can see it visually. Big candle. The wick actually goes down to here. So we've got a huge hammer, if you will, with 1.5 tons of volume coming in under it. And as a result, we might expect that market to actually find some momentum to the upside. That's also confirmed. We look at the 10-minute CSI. You can see the euro here is getting down into oversold. The dollar here, the red line, is getting up into overbought. So from a potential reversal perspective, that would certainly be one that I would have my eye on. So we've got the Aussie selling off as well. That was up into overbought as well. That's now selling off quite strongly. You can see the same sort of thing is happening to the Swiss franc. And we've got the New Zealand dollar diving down into oversold and may well reverse in due course. Covered it in detail this morning about your approach to market, whether you're going to be a tactical trader who takes maybe one tactic to market. Maybe you just take the tactic of reversal trading. That's all you're looking for. And you apply it to currency markets, you apply it to futures, whatever you may prefer. You might decide that you want to be a breakout trader, so you look at congestion phases all the time. You're looking at the volume point of control here, for example. You're looking for those regions of congestion. Let's face it, 70% of the time the market congests. So it's not a bad practice. It's not a bad tactic to employ. So if you want to be a breakout trader, you're looking for those zones the whole time. You're looking for the ceiling and floor of support. And then you're looking for VPA to confirm the breakaway from those particular regions. You might apply that tactic to a handful of pairs or a particular market, or you may apply it to a broad market indiscriminately. You may take a whole bunch of tactics to market. You have to decide this for yourself and find out what works for you, what you're comfortable with. It'll depend on how much time you've got available. It'll depend on how much money you have available, and it also largely depend on your personality type, what suits you as a trader. Are you suited to scalping 15-second charts, 1-minute charts, or is that just not your bag? It's not going to make you feel comfortable, in which case don't do it. As simple as that. Seen the buying coming in here. We're starting to see that reflected now. And if you were short this position, you saw this signal coming in, then if you didn't close out your whole position, you certainly take some of it off the table now, because there's a 1.5 tons of buying coming in under that particular candle, and therefore the expectation is that the market's going to rally a little bit from there. Then you're looking for obviously changes in the trend dot color. You're looking at ultimately changes in the trend monitor. You're looking at confirmation of that rally in terms of the volume and whether it's a strong rally. In other words, it is a full reversal from this, which is a primary bearish, into what is potentially a primary bullish phase, or is this simply a secondary trend against the primary trend of the bearish phase? And that will all be dictated and described for you by VPA. We cover it in the education program in huge detail because it's one of the most important aspects. Because if you understand that element of VPA, then you will make your life a whole lot easier, because you won't be getting out when you're staring at a secondary and closing out an emotion, whereas actually you should be staying in and just maintaining the primary. and maximizing what is available in that trend. It's the most powerful application of volume price analysis, bar none. So that's where we are with the euro. I'll slide that back out of the way, see what else is going on. Move that over there. Gold is finding a little bit of love. Just go back to the indices. That's all three of them. They're all weakening a little bit now. That's on the 5 minutes. We had some weakness come in here. We've had further weakness come in here, particularly under this candle here. Got a repeat of it. Very lightweight volume in terms of upside interest. So it's just looking very weak and toppy at the moment and just rolling over, which is what you expect to see. Will these others follow? May well do. Let's have a look at them. Similar sort of thing here. We've got a big wick on this candle. You may not be able to see it, but it's certainly there. That's the body of the candle. And you've got a little bit of a, well, you've actually got quite a long wick. It's much more of a long-legged doji. Lots of volume. This is symptomatic of indecision. The markets are uncertain. So you get a long-legged doji candle. It doesn't indicate a reversal. It's just indicative of congestion. In terms of the ES, more straightforward. Big wick to the upper body, lots of volume underneath it, pretty weak. So we're going to sit around the volume point of control for a while without any great direction, unless of course something comes out on the wires, on the fundamentals, or Mr. Trump decides that he needs to tweet something for us. Then of course the market will react accordingly. Just see what's happening in terms of the indices, the currency indices, top down here. Okay, we've got some weakness on the dollar here. You can see it just purely from price action. Big wick to the upper body. It's we haven't got any volume on this chart, but nevertheless, just from a price perspective, price action alone will tell you that that's not a strong signal. Euro's bottoming out. You can see we've had that strong selling starting to bottom out. Pound's still sort of climbing, but not terribly strongly, and the yen is going absolutely nowhere at the moment. Just keeping an eye on what's going on in terms of euro over on the other side. It's starting to claw its way back a little bit off that volume. Let's go back onto the tick charts again. And really that's reflected on the tick charts as well. These tick counts you can see is very sluggish. This was 610, this has now dropped to 377. So it's halved. In other words, there's a real lack of interest at the moment. That is reflected on the tick speedometer because we've gone into red. We've got some orange, but it's primarily red that's just dominating this market. In other words, it tells you here it's very slow, very sluggish. There's no great momentum. It's the same on 3 minute, and the same is now impacting on 5 minute. These are now running at the same speed, 1597, so this one has dropped also. So we're just in congestion. Let's just pull the euro back again. See that little bit of tick up, and if I change this over to a different time frame, let's go down to, I don't know, 3 minutes, say, just for a different perspective. Sorry, I've got a lot of data running. A little bit sluggish. There we go. That's on 3 minute, and what we're seeing on 3 minute is exactly as I suggested you would see. We've got the volume here. Obviously, there's clear buying in that particular candle. We've got a 2-bar reversal here as well, further along, and now you're starting to see this trend monitor is transitioning. It's gone from bright red, it's gone into a darker blue. It hasn't gone into dark red on this occasion. It's gone straight into a darker blue. And ultimately, if this is going to develop further into a nice trend higher, then this is going to change through into a bright blue to support that particular move. So, yeah, and the VPOX moved down because the volume here is now greater than it was higher up the chart. And over on the left, as I said earlier, you've got the dollar here, which is now deeply into overbought. and the euro never actually quite got to oversold. It doesn't matter. It doesn't have to. There's no rule set that says it has to get down to this level or deeper. It's now starting to tick up. So we're now starting to see a little bit of buying coming in terms of the euro. What's it being bought against? Well, it's not being bought against the pound because the pound is rising as well. The yen's kind of ticking up. The Swiss franc is kind of ticking up. If you were looking for momentum on here, then maybe the pair to look at, certainly the euro dollar would be one, and the Canadian here at the top would be another. But certainly in terms of euro Aussie, what you'd see on the euro Aussie chart right now would be a nice trend developing, primarily because it's being driven by the Aussie, which is falling quite steeply. But as the euro starts to accelerate, then that trend will accelerate further. So that would certainly be one to look at if your approach to the market is much more to do with trend trading, because that trend will already be underway in this particular time horizon, and therefore you're jumping onto an existing trend, as opposed to, let's say, someone who's looking at the New Zealand dollar and the US dollar as a reversal tactic. They would be waiting, they would be patient, they put a much wider stop loss on, and they'd have to wait for that particular move to get underway. It hasn't started yet in the 10-minute time horizon, but it may well be developing through from 5, 6, 8, 10, whatever, and up to 10, and then gradually dissipate through into this particular time horizon. I'm going to move back to Anna at that point. Looks as though we've got a little bit of activity now. Maybe we've gone back into orange, so perhaps the participation is going to pick up again, and we'll see an uptick in activity thereafter. Right, I'm going to pass back to Anna.
Back. And just keeping an eye on what happened with what's been happening on the pound Aussie. It did actually has managed to lift off the volume point of control here at this point in the 85.80 area, but we've had a quite a wide up bar there with a reasonable amount of volume underneath it, but it's sort of then it's gone into a bit of a congestion phase here. Price desperately sort of trying to keep higher, as it were. You can see that on the Renko. The Renko has kept going, as it were. It's just picking up the little bit of sideways price action that we can see at the moment. On what's interesting as well, just have a look back on the 5-minute chart, is where the VPOC is at the moment. I've been watching the build in the back of the histogram here on the volume point of control, and really what we want now, if this is going to carry on higher, we want the volume point of control. If that were to jump up higher, then that would be good from a bullish perspective, because then this is just a pause point, if you like. This is, if we take this to be the primary trend higher, the breakaway from the volume point of control, then this secondary, it's not really even a secondary, it's really just gone into congestion. That is all it is. It's just a pause point. And this is how you can use these indicators as well. Or if you haven't got the indicators, then I think you're going to struggle in trying to make sense of the structure of the chart. What is the most important zone, as it were, in terms of a value area. Sometimes you can sort of pick them out. They are fairly obvious just from the price action. I'm just going to go on to the YM, which is it's not actually the YM, but it's a version of the YM that is available on this particular platform. A lot of I think most MT4 brokers and MT5 brokers, they do offer traders the option to trade other asset classes, not directly. It would be like a derivative of the futures contract, but at least you can trade. I think it's called on this platform, it's called the US 30, but it's just interesting to watch price action. And as always, when something is moving higher, it can look and feel a bit of a grind, basically. Good to see wicks to the bottom of the candle. Again, what the Renko does, it picks it up, it just holds it. We know we're in congestion. I've actually got fractals here. I've got pivots here, pivot there. If we get another pivot along here, then we're definitely in congestion. And really it's a case of, if it's a pause point, hopefully it will just be that, a pause point, before it carries on higher. We had a lot of volume under that one. Then we had this down candle, not a lot of volume under that down candle, which is good from the perspective of if this is going to actually roll over. We still haven't had a transition into the bright blue, but you know, it's what we would expect because it is not moving very fast at the moment, and certainly no change on the hourly chart as well. We're still you know, working off the buying that came into this under this initial candle following the dramatic move lower at the time of the BOE. And again, the upside targets, upside price objectives. Here we've got 86.50. Nice round numbers, zeros and fives. Certainly in all markets, zeros and fives are like they're magnetic to traders. They like to put their stops around these numbers. Please don't. Because you and every other trader out there is doing exactly the same, and the institutions and the insiders, you know, do recognize that it's it's a characteristic of trader behavior, and they will certainly exploit it as much as possible. My initial view is where this price is going. This is a fractal, a 200 MA based on fractals, and it's obviously helping to cap the price action. Maybe you've got that, use whatever moving average you like. This just happens to be quite efficient in highlighting these areas where price is going to struggle. But if it manages to get through, it's a little bit of a grind. We went through this bit here quite quickly, as I said we would, because it was a low volume node. Now you can see here from the histogram, it's there's a bit more in terms of resistance, volume-based resistance. But if you can get over that, and we've just had the trend monitor move bright blue as well, which is good news. And let's see if what happens here on the 5-minute chart. Yeah, we're looking as though we're going through as well. It would be very nice if this came up here, giving us some support, and just generally, you know, pushing this this pair higher. On the CSI, what's interesting is there's quite a lot of pound buying. This is the hourly chart, and we see here this is quite strong. We've got a nice sharp angle on that on this line for the British pound. The Aussie hasn't actually kind of turned over at the moment. It's kind of a bit flatlining there, which tells me this move is being dictated by the strength in the pound, the flow into the British pound. And looking at the British pound pairs as they are on the matrix, which is ranks the pairs. And in fact, at one point the pound Aussie was way down here, and it's now jumped up to spot 14. It's not the strongest. We've got the pound New Zealand again against another commodity currency, but it's looking good. The Renko would keep keep us in, and we've got an idea of where this price is heading. If you're using a trade, obviously your stop, you'd be moving your stop higher. If you, as I said, you'd be putting your stop when you initially look at this trade below the volume point of control, and you just be moving it in a series of steps. And talking about stops in a low volatile environment, we have volatility this morning, but we have a low volatile environment at the moment for this particular pair. So you can afford to have your stop a little bit tighter when things are volatile. You just the stop losses have to be that little bit wider. So I'm going to keep an eye on that and see if the VPOT can actually push up there, which will be good news all round. Now, I said also you can have you have the option to trade other markets on MetaQuote platforms, and this is the 12-minute chart for the this is the equivalent of the YM. This is the US 30, which is the Dow basically. This is the initial move higher on that China news, and then following that, this long period of consolidation, moving sideways. We know that because it's rotating around the volume point of control. We've got pivots to the top, pivots to the bottom, fractals top and bottom. clearly defining the congestion area.
Sorry, Anna's just having a coughing fit. Bear with us a moment. Bear with us a moment. Anna's just getting she's just grabbing a glass of water. Apologies. Sorry about that. She'll be back in 2 ticks. Don't go away. We haven't gone anywhere. I'm just checking out what's going over on the other markets. VIX is it's sliding lower, so there's not a great deal of activity there. She's back.
Apologies there. Okay, then we had the open, which is we have here, always accompanied with volatility. And what happens is you see here with you have the volume, very much just a rush of volume as the physical market opens, and this then has an impact on the preceding volume, which actually pushes all those volume bars down. When you read this volume, you have to read it in context to the session that you are trading, and relative to the time of that session. So at the open, you always have this inrush, and we've had this push higher again from picking up the good news from earlier on in the day. It certainly looks as though it wants to stay up there. We're having a little pullback at the moment. There's a lot of volume driving in. The problem now is, though, you have very narrow spreads and a lot of volume, which is not good news either. So with VPA, you are constantly looking out for anomalies between with what you're seeing with the price action and the volume underneath it. Is it authentic? Is it is it what you should expect to see? I've actually got the 3-minute here, and we can see there's already maybe a slight reversal in the YM. We haven't sort of transitioned to bright red. We're still in this transition color. I haven't got a Renko here up for the YM, but I have got the facility to put a Renko up. Then I've got the 12-minute. As we were looking at, this is this move higher, and let's just have a look at the hourly chart as well. As I said, this is the earlier on in the news, lots and lots of consolidation before that. Then the unexpected news that China, as I highlighted earlier, that very conciliatory about the tariffs. Good news for the market. Risk on, bit more sideways. This is the open, and as I said, a lot of even more volume under this candle here. And we're just having a little pullback at the moment. But then you would expect this because markets are at an all-time high, a lot of complacency in the market, and markets take a long time to rise. But boy, when they fall very, very quickly. Anything else you want to say to that? Yeah. No, that's it. I think we've had some questions. If there's anything we said and you want answers, you can either drop me a line, anna@annacooling.com, or you can drop David a line. The indicators that we've been using are quantum trading. This is the website, quantumtrading.com. You can buy them individually. You can buy them as a bundle. We have a full package of indicators. If you want a combination of the indicators that actually isn't shown as a bundle, then again, just drop us a line. We'll happily do you a special price. The advantage of the package is that the indicators, when we develop new indicators, they're automatically added to your package for free. All upgrades are free. Upgrades to the platform is free as well. And as David's pointed out, we've also developing them for TradeStation as well. All covered by a 7-day money-back guarantee. Anything else, David? That's it. That's it. Oh, and I know we focus on the indices here, but I had the Forex up as well. We have the Forex program. If it will load, hopefully it will. This is where we are, and these are the modules that are part of the program. The program includes a package of indicators, and you have to select which package, which platform you would like with the program. That's it. Anything else? We are back hopefully next week. But we may not be, we may have to change next week. It's because our daughter is about to have a baby. So, we are on standby at the moment. It's all very exciting and very nerve-wracking. So enjoy the rest of the trading day, the rest of the trading week, and we will catch you next time. Take care.